How does the national sales tax compare to VAT, value-added tax? Have you ever wondered how a national sales tax stacks up against a value-added tax? Both are forms of indirect taxes, but they operate quite differently. Let's break it down in simple terms. First, let's talk about where these taxes are applied. In the United States, sales tax is set at the state level. Each state decides its own sales tax rate, and local areas can add their own taxes too. This means there are thousands of different rates across the country. On the other hand, value-added tax is applied at the national level in many countries. This creates a consistent tax rate throughout the entire nation, which can make things simpler for businesses operating across regions. Next, consider how these taxes are collected. With sales tax, businesses collect the tax from customers at the point of sale and then send it to the state or local authorities. This process can vary significantly depending on where the sale takes place. In contrast, value-added tax uses a credit invoice method. Businesses pay value-added tax on the value they add at each stage of production or distribution. This method can streamline the collection process and reduce the chances of revenue loss. Now, let's look at registration requirements. For sales tax, businesses must start collecting it once they establish a nexus in a state. This can depend on having a physical presence or conducting enough economic activity there. The rules can vary widely from state to state. In comparison, businesses dealing with value-added tax must register once their sales exceed a certain threshold, usually based on their sales over the past year. This threshold is typically clear and straightforward. When it comes to tax rates, sales tax rates can differ greatly from one state or local area to another, leading to a complicated system. Value-added tax rates, however, are generally more uniform across a country, with a standard rate and possibly a couple of reduced rates for specific goods or services. Lastly, let's discuss administrative efficiency. The decentralized nature of sales tax in the United States can make compliance tricky for businesses, especially those that operate in multiple states. Value-added tax is often seen as more efficient due to its centralized management and the credit invoice method, which helps minimize revenue loss at the retail stage. From a conservative viewpoint, a national sales tax could simplify the current sales tax system by reducing the complexity of multiple rates. However, implementing such a tax would require major changes to existing fiscal policies and might face pushback due to concerns about federal control over taxation. Value-added tax, while offering administrative efficiencies, may be viewed with skepticism by conservatives because of its association with higher tax rates in various countries. In summary, while both taxes serve the purpose of generating revenue, their structures and implications differ significantly. Understanding these differences can help inform discussions about fiscal policy and national debt reduction strategies.